All right, the market was down almost 600 points today. We heard from Powell, we heard from Trump. So what the heck happened? We have to find out. We're going to stop here first. Executive editor Brian Sazi. Ooh, he's periscoping.
What
Hi. Hi, Brian, people.
Hey, photobomb.
Okay, what's happening?
I don't know. Going back to my interview for a couple weeks ago, Byron Wien told me investors need to get the complacency beaten out of them, aggressive, but it looks like it's happening. I think people are freaked out about the tariffs. I don't know. What do you want?
Yeah, I'm with you on that. But is this something that we're going to see every day? You think this is going to stay?
Stocks will go up tomorrow. Yeah, it's going to go up.
Okay, he's singing. He's singing. We're moving. We have to take this a little. We got to go find some technical analysis here and find out what's happening, because it's definitely not the soundtrack of Annie that's causing the stock market to fall. All right, we're moving on over here to Zeb Fema. Zeb works with AAP. He's research analyst. Tell us. The guy looks at charts all day.
Yeah, so we're just keeping an eye on a few levels, a few that I would point out. So here is a chart of the S&P. This was the high on January 26th, the intraday low on February 9th during the sell-off. And we actually held this key level right here today, closed above it on the S&P. This right here is a chart of the NASDAQ, closed right above a key level right there. The Dow, same thing, closed right at the key level. So good signs for tomorrow. We'll see what it brings. One other one that I like to watch is the VWO, which is emerging markets, to try and get a read on international equities. And we actually did touch a key level right there and close above it. So feeling pretty good. And then if you guys watched Mad Money, you know Jim loves the short range oscillator. We're down at minus 0.3, so well out of overbought territory. And we'll be watching this closely over the next few days.
You're awesome, Zev. Thank God you're here to talk about all this stuff. All right. Real Money's columnists, though, have been following this all day long, so we're going to go talk to them next. Oh, by the way, Jeff Mark's birthday. Really cool cupcakes here, too, in case anybody wants. Kramer prepping for Mad Money, which is why he's not here. Speaking of Real Money, though, Jerry Cronenberg, managing editor, your columnists have been covering this. What happened today, Jerry?
Well, we're actually looking how to play this. So obviously the steel tariffs were the big problem, but we got you covered on how to do that. Doug Cass, our columnist at Real Money Pro, is going to talk about, or has talked about, why steel tariffs are bad for the economy and bad for the market. Stephen Guilfoyle, known as Sarge, will have a piece tomorrow on how to play a possible China trade war, what to buy and what to sell. Jim Revshark Taporia, our premier columnist on Real Money, talks about the S&P 500 breaking 2,700 and then bouncing back, but he doesn't believe it. He thinks we have more to fall.
He doesn't believe it. Tons more. So make sure you subscribe to Real Money. Definitely subscribe to the AAP stuff, because those guys are amazing. All right, we're going to go interrupt Scott Gamm right now. He's got a guest, Adam Robinson, here. You two, go. I mean, I don't want to interrupt your interview here.
All right, Tracy, thank you very much. Adam, we've talked about this so many times before. There's a tendency for investors to latch on to some sort of an excuse for why the market is down. It was the 10-year yield. It was the Trump trade tariff. Let's take a step back from that for a moment.
Sure.
What's your reaction to this decline?
That it was something that I warned my clients about yesterday. I said the market had probably reached a short-term top pre-market yesterday. It's down about 3%. The real problem is that Europe and Japan. You'll remember the last time I was on about 3 weeks ago, February 12th, that I said Bund yields were rising much faster than U.S. yields, and that was a problem globally. So the S&P down, 2% year to date as of this today. The DAX is down, German equities are down almost 8%. Same with Japanese equities. They're really getting hit.
U.S. stock market up about 4% from those February lows, but credit spreads have actually deepened. So what does that tell you?
Correct. So bond traders are more worried today than they were at the sell-off lows, which is a concern. So one of my best leading indicators for the market is the ETFs LQD and IEF, which is the relative performance of investment-grade bonds to U.S. Treasuries, the credit spread. And the investment-grade credit spread is widening. It's wider today than it was during the sell-off lows. So bond traders are more worried than they were 3 weeks ago, and that's a concern. Whenever bond traders and equity traders disagree about the markets, the bond traders are always right.
And when you were on our air on February 12th, you said when we have sell-offs like we did in early February, we may retest those lows within a month. Well, here we are at 2677 in the S&P 500. The low in February was 2581. So your prediction is coming to fruition.
Well, we'll see. We'll see. So my prediction was based on when we look back over the last 50 years, the last half century, every decline that matched the ferocity of the one we saw just a couple of weeks ago, the market retested those lows 5 to 8 weeks later, which is March. So we're right, March is the window. And March, we have the Fed meeting coming up, and we have earnings season. So there will be enough catalysts to drive the market down to retest those lows. The key thing is that U.S. equities continue to outperform global equities. So the real problem, again, as I mentioned on February 12th, when I was here last, is that Bund yields, European yields, Bund yields, Germany, are rising much faster than U.S. yields. And that's a problem for Europe. The United States, we can deal with higher rates. Europe, unclear.
All right, 10-year at 2.811%. So we'll watch how it all plays out. Adam Robinson, thank you so much for joining us. Tracy, we'll send it back to you. What a day.
This is all good stuff. So we got you covered from basically every angle. Equities, technical, bond market. We always have you covered. And look, you're going to have days like this. The ups and downs of the market, it's kind of the norm now. But you got to stay tuned to us. The Street, Real Money, AAP, become a member, and we'll keep you calm.